To kick this off, what a wild week, what a wild last 24 hours. It's 9 o'clock or just after. I just finished up a little bonus session for the Flex Trading Room, and we're just going to carry on this conversation to YouTube. So, welcome everybody. Hopefully, everyone's just tuning back into the Flex, joining me on the YouTube channel, and anyone else on YouTube, on Facebook, on Prancer, on Dancer. Nice to see everybody today. Let's get after it. We understand that there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading with stocks, options, futures, forex, cryptos, whatever financial instrument or asset class, you know the risks. Okay, let's get into the trading. Nice to see everybody. Happy Friday. I left off, actually, I was just in the middle of the flex session and a bonus session. We left off on New Zealand Swiss, and this one I'm just trying to cheer it on a little bit. Like, let's go, get up to take out this recent high from yesterday. Pretty crazy indecision from yesterday to today. Currency strength chart is showing some lovely commodity strength, which is also evident from yesterday. You know, oil hit $100 and then rejected. We had soybeans up, we had wheat up, we've had natural gas prices higher. There's a lot of ramifications that are potentially happening, and there's a lot of speculation on what this all means between Russia sanctions. Obviously, the invasion. Is China going to be a part of this? Is China going to be an ally in this for Russia? I don't know. How deep do the sanctions run? How penalizing are they? I don't know. You take all this with already problematic supply chain woes and higher inflation levels that continues to stick, a Fed that's talking about tapering and talking about raising rates with an ever-changing expectation to the funds rate. So right now, this is what is forecasted for March's FOMC. It is now 75% in favor of just a 25 basis points rate hike, not 50. So again, we keep acknowledging, like for the last couple of weeks, this has been up and down and up and down and completely going back and forth between 25 and 50 basis points. Again, this might change next week, but it seems like all that we're seeing is the Fed is trying to navigate this soft landing. I don't know. I feel like the Fed is it Scully? Or is it Sully? Who was the pilot that landed in the Hudson River? I feel like that's what the Fed is doing right now. They are like about to crash. They're just trying to figure out how can we do this without killing everybody. So maybe it's 25 basis points. We're like, all right, we'll stick to our promises. We'll raise rates, but it's not going to be an easy landing. So anyway, let me jump in here to the channel so I can catch some comments. There we go.
When the market's good.
Perfect. All right, and see a lot of the usual names. Tron, nice to see you. Fana, Jawan, Denise, yes, right to have you back in the chat. Andrew, Kevin, all right, thumbs up, like that. Get it started. Right out of the gates, thumbs up, right? Cool. Sully, that's what I thought. Sully Sullenberg, aka Tom Hanks. Just kidding. All right, so New Zealand Swiss looking good. Let's just do a couple more currency pairs where we were carrying over the flex trading room session. New Zealand yen, a lot of indecision, but off these lows, and we're talking about buy with a small stop below the lows, and the U-turn's working out pretty well. Right now, again, look at that currency strength chart, and you're seeing Aussie is on top, New Zealand's on top, nice recovery. My favorite aspect of this entire day is that I'm long Aussie Swiss and I'm long New Zealand Swiss, and guess what? They're both the strongest, and the Swiss is the weakest. Okay. So hopefully that continues to stay and stick around. The Aussie Swiss, we've talked about this really key resistance level at 66.75, and today it's trading above it. So hopefully it will close above it. And as I said yesterday, the Aussie Swiss, if we get above 66.75, which right now we're at 67.07, we have a yearly pivot sitting right here at 67.70. We have a previous high around 69. Let me actually check and see what the heck is my break even on the Aussie Swiss. And if you happen to check out, I've got a 6,700 break even. So I'm like in profit now on the Aussie Swiss. I would like to see that bad boy obviously get me into a bigger profit, 6,750 to 6,800. That pivot, like I said, is at 6,770. If you check out my channel, I did post a video. It was kind of a random time. I didn't plan on doing a video yesterday, but I did. And I just posted kind of a state of the market video. It was going to be in the trending topics playlist section, market snapshot, buy the dip, fade the rally. I just kind of talk about everything. Like this today, this daily candle, today's weekly, this daily candle that closes and the weekly candle that closes in stocks and forex, it's going to be important to see like how we take that into next week. Are they decision candles? Are we breaking highs or lows? Do we have breakouts emerging? Yes or no? We'll have to find out after today's close. The good thing is, at least in stocks and in options and in forex, there is a cutoff point today where at 4 o'clock, no more trading stocks. At 5 o'clock, no more trading forex. And so, in one of those weeks where it's been pretty wild and pretty crazy, that's a good thing. Of course, I'm curious to see what cryptos do over the weekend. But if you take a moment, check out the video. I just kind of assess everything. I will be working over the weekend to do what I say in the video, which is I'm going to take every instrument that I have and I'm going to plot my break evens. And I just need to know, like right now, it is more important to me. I'll give you a little tidbit of that video. It's more important to me right now to have free capital, to have the cash and the margin that I can work with to take new trades and focus on what I really want to be trading. Um, and here's why. I have a lot of stocks running. I probably have too many positions open, in all honesty. They're not all bad, but obviously if I have to pick and choose, if the market is going to be in this, very volatile corrective cycle, I need to pick and choose what I'm willing to hang on to. And so if I'm let's say I have 100 positions open, right? Which I probably have more than that between stocks, actual like tickers open, and option plays. I probably have 100 plus positions open in stocks and options. I have 70 plus positions open in forex. So I be dabbling in a lot of things. But what I was going to say is, let's say that I'm the employee, or I'm the boss, and I've got all these employees, and they're all working. Okay, now clearly, just based on like Pareto's principle, some are going to be better than others, right? So I want to keep those that are going to be offering the biggest bang for my buck and the most reward. There are going to be some that I want to keep around for a long time that are like, this man or woman can work for me forever. And then there's some that's like, well, they just got here, they're not really doing their job. I don't know what's going on. I don't think they're going to last here very long. So I'm going to find a way to like get them trained up, give them some KSAs, some skills now, some knowledge, skills, and abilities, and then, maybe send them packing, maybe fire them. I don't know. I'd be a terrible boss, I guess. But my point is, I'm trying to pick and choose with my stocks and my positions what I'm willing to get rid of. Now, that doesn't mean I'm getting rid of them as like I'm going to close them for losses, because I don't want to do that. I don't want to close for losses if I know where my break evens are at. So what I'm going to be tracking is based on my spreadsheet that I use in Equities on Demand. What exactly are all my break even points for all the stocks I have? And I'm just going to list them from A to Z. If I have just the stock trade, what's the break even on that stock trade? If I have an options trade, what's the net break even after I let that trade finish and it comes to expiration? And then I'll be tracking real time Google Finance, like at the end of the day, at the closes, am I in profit? Are those levels getting hit? And I'm just going to start knocking some of them away. So if I'm in profit, I'd love to say that every stock I'm just going to hold on and make, just tons of money. But right now, even if I'm in 100 shares, if I'm in 100 shares and I'm up $1, $2, $3 a share, it might be worth protecting. If I'm in 1,000 shares and I'm up $1, $2, $3 a share, it might be worth protecting. Because once I can get that capital back to free capital, to me, that's the most important thing. So that's what I'm going to do over the weekend. I'll share that with everybody on Monday. You come back and join me for the YouTube session. I'll show you the spreadsheet. I mean, it's not that hard. It's just you got to do the work. Okay, look, sometimes you got to do it on paper. I do this every week, and this is where it starts to get to the point where sometimes management is a pain in the butt. It's like you got a lot of open positions. You got to know where this stuff is. So anyway, I digress. Let's get back to the charts. But makes sense. So it's just knowing where your trades are at and taking ownership of everything. And I know that right now I'm probably, a little bit too spread out. I wouldn't even say too diversified, even though I kind of am. Like I haven't seen a lot of fluctuations in P&L because I have good sectors and I have bad sectors. I have good stocks, I have bad stocks. I have good forex, I have bad forex. I mean, so in a way, it's like I'm kind of hedged in a lot of ways, but not like overextended. I still have plenty of cash and margin to work with, but I just need to know like where can I get rid of stuff? Where can I take some profit, move on, put that capital, allocate it elsewhere, and just continue to work and be more like Ray Dalio has like the all weather portfolio. I kind of like that idea. Where it's a nice mix, it's pretty well diversified, and you're trading enough instruments where you can still have strong sections run and make you a lot of profit, and it's also able to offset the sectors that aren't doing well or things that get cheaper that you're willing to buy more of, So, but I think right now it's like I want to go with my strongest racehorses. You know, that's my plan is like find the strongest ones, get the odds and probabilities in your favor and then just ride those winners. I think that's the best thing you can do. Okay. All right. So that's it. Talk about the stock market this morning. It's 9:12. We've got 18 minutes for the open. Is the pre-market up? It is. So we're up about $1.40 right now in the SPY, which was more than when we started that bonus flex session. We were up like 20 cents. So SPY up about $1.15 right now. The DIA up about $1.30. The Qs, which had like a 6% rally from low to high yesterday, which is very impressive, is up $1.05. The volatility index put in a short-term high. I mean, we spiked up here. This is where the market opened yesterday with the VIX at 37.75, and we just pushed it right back down. Now, I do want to check one thing. SVXY, we're at 51.71. Ah, shucks. My break even on this one is 53 and change. Here's my spreadsheet here that I'm tracking all my break evens. And this is not that somebody asked me in the YouTube comment. I posted a YouTube video yesterday that I was just talking about. I'm not going to use the same spreadsheet because, look, if you have the spreadsheet with me in Equities on Demand, you know the break evens. What I'm going to do is I'm just going to take a very basic spreadsheet, track all of my instruments. Like down here at the low, you see all these tabs. I mean, this is fine if I go stock by stock by stock, but I've got to go tab by tab by tab. I'm just going to list them on the sheet and then put the ticker, then put the action, then put the break even level. Is it above it or below it? And just, do some conditional formatting and data validation. Just simple stuff. But I just want to have an at a glance, like what's in profit, what's not, what can I get rid of, and I can start knocking things off and start to trim. I'm gonna Edward Scissorhands my portfolio a little bit and start trimming away so it's a nice beautiful goose in my lovely garden. Okay. Anyway, but let's go to SVXY because I do have that cost drilled down to like $53, and SVXY is right here. SVXY. So I own this now. So again, this is after the covered call expires, which will be next Friday. This expiration is 52.92. If I lose this stock at $56, that's the price of my covered call. That will be a $3.08 profit. So 308 on my 100 shares, I'll make some money. I'll get rid of that. I'll make $300. I'll get rid of this. I'll make a couple $1,000s on other accounts. Like, great, I'll do it. Again, take that capital, take some profit, turn it into free margin or free working capital, free capital rather, and apply it somewhere else. Okay. All right. So SVXY, because we've seen volatility twist and turn where it spiked up higher and volatility is down. Now we have the SVXY at these equal lows pushing back up. So I'm looking to see like, does this end up coming back up to 56 plus? Does it come back up into here to $58, $60? I mean, I could also let this run uncovered if I'm going to be a little greedy and try to take it up a little bit higher, but I don't know what we really have as far as like the market's ability to come back and break new highs. I don't think the market's anywhere near breaking new highs. We talked about this morning in the bonus session for Flex. This is what I actually see happening right here. I see this high, this low, okay? And I see this low to this low. And this to me is like a nice little corrective channel where we're still in a bearish structure, but I can see the market getting there this type of way. What was every time we had a dip, it was buy the dip, buy the dip, buy the dip, right? And we did that for months and months and months. And now I feel like it's turned over to officially, now we're talking about selling the rally. And we sell the rally based on this. If this structure holds, we're talking about selling the rally. That's what I see playing out over the next maybe 3 to 6 months. The market is still uncertain with the reality of Russia, Ukraine, the overall implications of how big this gets on the global scale, sanctions, no sanctions, East versus West. Is this China, Russia making a stance against the U.S. and the Eurozone? I don't know. But if this is the structure I see, this is what I have to trade. So I think that with another kind of positive note today, it'll be nice to call today on 4 o'clock, 5 o'clock, be done trading, enjoy the weekend, get ready to do it again next week. But I think the market, even on a bit of a relief rally, is still vulnerable to another flush down. Okay, and maybe the market's not going to have the same reaction to Russia Ukraine. Maybe they're going into talks. Maybe it's the reality of the sanctions setting in. I don't know. But guess what we have in 3 weeks? We have the Fed. The Fed rate decision, 25 basis points. Is that good or bad for the market? I don't know, right? It's a tapering cycle. It's a tightening cycle. We're going to be done by conceivably by the end of March. The Fed is done with their mortgage-backed securities and their treasury purchases, right? They've scaled that. They've unwound that so quickly that they're essentially done in March and then starting to raise rates. And the question is what are they going to say? Are they going to raise rates 3-4 times? We've had Fed speakers in the last couple of weeks have been very vocal, saying like we might do 5 rate hikes, we might do 6 or 7. We've got J.P. Morgan, Goldman Sachs talking about 5, 6, 7 rate hikes. So that's why it's been so stupid and uncertain. It's like nobody's really given us, and the Fed's usually decent about giving the market the information that it needs, and they have not been decent about it because it's been coming from everywhere. In addition to navigating, yes, inflation is higher and it's getting higher, and the numbers keep showing it, even though they're trying to fudge the weighting anyway. But so that makes sense. Like, see how this I see this playing out this way. We have high to low, high to low. We had obviously a bullish day yesterday. If that recovers and drifts into Friday to close to the week out, then sure, we still have a little bit of recovery, but I think it's vulnerable to hitting some pretty heavy resistance ahead. Between 440 and 460, I think the market is still absolutely willing to sell off. All right. Now, if I'm totally wrong on that, fine. I'll be wrong. Believe me, if this market finds a way to come back to these highs, I will welcome that with open arms because I'm going to have a portfolio that just crushes it. But I'm also prepared for I need to get these trades to break even or better. I need to repair some of these positions I'm in. I need to get that free capital back and focus on what's working. So I will. Right? So I think right now I'm just preparing for the structure that I just noted. I think we're going to be in a downward correctional cycle, and this market might have we scored a point for those bears, and the market pulled back. So if we go back up, we hit a lower high and then we flush back down, and this timing could be there's a little bit of a relief rally prior to the Fed, and then maybe the timing of into March. Okay, here we go. We're raising rates, and the Fed says we're raising rates this many times. The market doesn't like it, and we sell back off again. I don't know. But guess what? We'll be trading it. Okay? We will be trading it. So let's trade it. All right. VIXM, this is another volatility play. I have a $34 call. I own this at $30.70. With the call, I owed it at $29.70. I'm going to hold on to this one. I have a covered call expiration out to March. I don't remember what the expiration is. I think it's the 18th. 3/18 expiration. Yep, I think it's 3/18 expiration. So I sold the $34 call for $1, and that means that if I lose it, I'm going to lose it from $29.70 to $34. So 34 minus 29.70, I would make $4.30 a share on that trade. But it's going to be above $34 by expiration. I may not get that trade. It might just lower my cost, and I'll just keep it uncovered, and I can still take profit here at the high 30s, and make a couple bucks on it. All good. All right. Any particular instruments you'd like me to take a look at? If you're with me in my flex room this morning, we did almost every currency pair. I left off on New Zealand Swiss, which is pushing up. New Zealand yen, if we bought it at the lows, New Zealand dollar and Aussie dollar are both looking pretty interesting because coming into the Fed rate decision in March, we do have a pretty obvious channel. Okay, and I could see this channel continuing to play around. Recently, with obviously yesterday's volatility was pretty wild and crazy, but this high, I do see that we have a yearly pivot right here. We have channel resistance. So going into this Fed rate decision, I know it's only a couple weeks away, but if there is a pattern that is built here, we might see the New Zealand dollar get into this zone, pull back prior to the rate decision, and then it's going to have to make a choice. Either we push back down to the lows or we break and go to this yearly pivot. So if we're sitting at an indecision point, I will try to be neutral on my position and just trade the indecision. Meaning like not trade the indecision, but trade the breakout of the indecision. So if we have indecision, I'm looking to trade the breakout above or below. Right? But from a technical side, if you see this larger channel, okay, we came down and successfully hit the yearly pivot from 2021. We now have this pending pivot up here at 2022. That price level is 7,000. 7,000 is a pretty key level on this New Zealand dollar. All right. So is there room to fall lower? I think there is, but the room to fall lower will also, my drawing is terrible today. The room to fall lower is also down here where it creates a lot of inefficiencies. If we fall aggressively, then I'm buying this thing at 62 to take it back up. Okay. But if we are going to stay in this channel where it just comes back up here, finds the yearly pivot, hits resistance, and then sells back off, and then you buy it again, then it sells back off. And this is what look, this, I'm telling you, this could be, and I've said it from literally day one this year, this could be the year of the trader, right? Why is that? Because if this is a structure we have to trade, it is price action decision making, right? That's all I'm saying. Linda, yes, it was recorded. It'll be in the archive. Yep, we did it at 8 o'clock, but you can check it out in the playlist. Anyway, any questions? So we'll see what price does. I'm curious to see what the Kiwi does versus the dollar as we go into the Fed rate decision in March. And next week is end of February. We kick off March with some busy news. We have ADP on Wednesday. We have oil inventories. We have non-farm on Friday. That's going to be the 4th. So it's going to be a busy week. But it's not the Fed rate decision, which is going to be the 16th, right? But it will be at least a kickstart to see, okay, what's GDP look like? Do we have any CPI data coming out before the Fed rate hike? I don't know, but we'll trade it. We'll figure it out, right? Campbell Soup, sure. Let's take a look. CPB. Campbell Soup at 43.54. A lot of volatility. I'm in the 45 by 44 today with the indecision. Right, well, it's 7 minutes before any pre-market movement. I don't see any. So if you have the 44 by 43, right now it's trading inside, right? So if this is the expiration that you have with me, the 225, or if you're in my Pulver Report top weekly pick with the newsletter, I did this one here, the 45 by 44. I still like Campbell Soup. I really do. I think this is one of those, this is a stock for me that even if the stock market goes up, this will be fine. If the stock market goes down, this will be fine. Do I see it really? I mean, we had a pretty good run on KHC, Kraft Heinz, CPB, which is Campbell Soup. I mean, look, we're coming off of some pretty impressive lows. This is back in 2019. COVID's indecision. I mean, we're just kind of sitting here like COVID lows, and it's like 41 bucks. So what I see is it's a dividend payer. It's low volatility. We can use options every couple of weeks, and we can drill our costs down. And let's say that over the next month or two, I hold Campbell's. It's not a volatile stock. I can drill my costs down, and then I can lower my cost to like 40 bucks, and it's trading at 43, 44, $45. Then I'll take some profit. So to me, it's a stock that I'm willing to own because it's going to be a bit of a defensive play against the crazy volatility. If there's high inflation, it's a food company. Raw materials and commodities are higher and probably will stay elevated. So to me, it's like, again, I'm justifying why I'm hanging on to it. I'm going to hang on to the trade. So based on the credit spread, I will probably take assignment of this 44 by 43. We collected 40 or 50 cents on it, and I'll take assignment. And I know the break even. I can try to repair it if we lose the stock in the next couple of weeks at break even or better. That's the plan. Okay. Yep. So if you're in the 45 by 44 is your expiration. So Kevin, is your expiration this week or is it next week? Aussie rate decision on Monday, CAD decision on Wednesday, Euro on the 10th, dollar on the 16th, pound on the 17th. Ooh, interesting. I overlooked that. Is that coming out next week then? So Forex Factory this week, and then next week. So we have OPEC meetings on Wednesday the 2nd. We have ADP numbers, BOC expected to raise rates. Hey there, for the first time, BOC. So that's a big one. RBA keeping rates the same. Yeah. Yeah, it'll be interesting to see what the RBA has to do. Now, they may, I don't know what I mean, I haven't heard the RBA really be like very vocal on inflation. Um, they've kept the rates at 0.10. They're now losing a lot of ground to the Kiwi, which is why we're short Aussie New Zealand. I mean, the New Zealand dollar is up to 1%, and the Kiwi's at the New Zealand dollar's at 1%, the Aussie's back at 0.1. That's a big differential. So to me, that would favor Aussie New Zealand to the downside. But RBA might come out swinging and say we are talking about raising rates later this year, and then it starts to get priced in that that kind of preemptive cycle. Expected to raise rates for the Bank of Canada, which is interesting for the first time in a long time. They've talked about it since 2020, post-COVID. Going into 2020, 2021, started talking about raising rates, didn't do it, and then here we are finally looking at raising rates. Yes, the Fed in the 16th is looking at raising rates. Let's go out to the next week with the ECB. Doubtful they're touching rates. Bank of England, is it after the Fed? On the 17th, so it's the same week. I don't have a forecast there, but I'm wondering if the BOE is going to raise rates again as well. I mean, we know this. We know that the central banks should be on a rate hike cycle. We should be coming off of zero to neutral to negative territory into raising rates and normalizing. We should be, because we can't exist in the 2020 environment forever. We've had these permanently low race to the bottom currencies for a long, long time. I mean, I think in a way it's like it's made me it's made me question the solvency and sustainability of like the entire fiat system, because like basically central banks have had a lot of tools in their toolkit and they used them to the extremes, and now they're like, well, I guess we can't go back to normal without having you know, some like component of our quantitative easing or some component of monetary policy. And there just seems to be like a lot of manipulation, you know, and obviously if you watch the market from 2008 to today, there's a lot of manipulation. All right. Kevin, I see your expiration there is next week. Okay, fine. So yeah, if it's next week, don't even worry about it. Talk about it next week. We'll see what price does. If it's down lower, then great. Like if price falls down lower, use that expiration to take that long put. If you want to take ownership of it, cash in like a $3 or $4 put, and then you can own it dirt cheap and have the thing bounce back up to 44, 45 bucks and get rid of it. Okay. All right. That's good on Campbell's Soup. We'll take a look at our expirations today. I do have some of these that I want to review. So Pfizer, let me take a quick look at Pfizer. I know that's another stock that I'm interested in for today. Is Pfizer recovering today? It's at 45.90, pushing down a little bit lower. So I do have a 225 expiration on Pfizer, and it doesn't look like it's going to get to my $40. I had a $14 long put. It's probably not going to get there, but today it's probably trading for $9.50, and I'm likely going to take it. And once I take this, if I take assignment on Pfizer, I'm done for a little bit. I'm gonna take my couple hundred shares and sit on them, and I'm just gonna keep trying to look at repairing it with some covered calls. I might just go out in the distance, go out in the future, give myself a month or two or three, and see if I can get some decent credit for like a $59 or $60 call, and just let this stock do its thing. I know that. I mean, right now it's like I was pretty bullish on Pfizer going into this year, thinking that we'd have. Look, I mean, I don't know if the market's like it's so over COVID, but I do think that there's going to be annual vaccines in some capacity. I think there's going to be booster shots. Maybe there's going to be annual vaccines or something you get along with your flu shot. And it's like, to me, that's fine. And if it's coming from Pfizer, if it's coming from Moderna, if it's coming from, I don't know if Johnson & Johnson's come back in the mix, but Pfizer is, I mean, they're on pace to make like $36 billion from their vaccines. I mean, if you're trading a stock fundamentally and they're sitting on just boatloads of cash, it's probably good for their stock and probably good for their stock price. So I'm going to take a look at this one right now. In fact, I think I may look at trying to cash in if I can. I've got a 55 by 54, and let me do the math on this. 55 by 54, and I'm going to talk about this a lot in Equities on Demand because we do have some trades to manage today. So 55 by 54, 54 minus current price is 45.95. I should be able to get $8 at least for my long put if I want to close it. Right. So once we wrap up the session, I'm going to go in and see what I can get for it, but I'll probably close it today because I'm willing to take the assignment. I want to know my break even. So let me look at this right now on my spreadsheet. Where did it go? My spreadsheet disappeared. Hang on a smidge. Spreadsheet there. Oh, there it is. Right in the middle. Pfizer. So if I take an $8 put, I'm just curious what my break even is if I take an assignment. So Pfizer is right here. PFE. So I have a credit spread. If I do my long put, Pfizer, PFE, there it is. $14.90. If I change this to $8, that would give me a break even around $49.50. Okay. So if that's what I get, $49.50, and the stock price is trading at $45.94, it's like I'm upside down $3 on the stock. Do I think I can get price to come back up to $50? Yes. Do I think I can hold it to 55 and 60? Yes. But I'll probably have to sit on it for a while. But I don't mind sitting on a company that's sitting on $40 billion of cash in profits. Okay. So anyway, it's a couple stocks. And we've got some other ones: Pfizer, Square, Intel, FCX, CTRA, Campbell's, Coin. That was another one that had a pretty nice recovery yesterday. I'm curious if tech continues to run. Maybe cryptos get a little bump today. We're trading at 179.22 on Coinbase. OKTA is another stock that I'd love to see get above $200. We're trading at 172 right now. And obviously, we need some love to the upside. I'm going to sit on this one. My break even is actually 195, and it's a volatility play. It's technology, but we've had some good, some really decent recoveries. I just don't know how permanent it is. The real key today is if the markets can hold with the momentum from yesterday, that's going to be important, right? So we had a slight gap higher. If we continue to push higher, if we proceed higher, I will be watching the heat map all day today. So we're in. So look, we're from scratch. Like market just opened, right? It's 9:32. What happens today? Is it green and Fangman stocks? Is it a mixed market? Is it green across the board? Is it fade the rally? We'll find out. We'll know more at 4 o'clock today. Chart alarm just went off. GD crossing 221. That is. I need to roll that call, man. This is one of my best running stocks right now in one of my long-term portfolios, and I had this thing covered at $200, and I think I just need to get rid of it, or I need to roll this thing up and out. So I'm just gonna wait. I've got the cover calls way out to like January of next year, but my break even on this stock is like 150. So I just want to let this bad boy run. So this is aerospace and defense, electric. What do they do? It's a bit of a blue chip. It's a bit of a dividend play, 2.48%. So here you go. Tanks, rockets, missiles, submarines, warships, fighters, electronics. Convenient. Uh, the Lord of War. Nick Cage movie. I never watched it. It's probably terrible. Anyway. All right, what else you want to look at? Let's go for a few more minutes and I'll wrap up. I need a little break. I need to grab some coffee before our 10 o'clock EOD. Plus, we're going to have a busy management session there. So yeah, we're watching the indices. Currency wise, let's finish up last couple. Dollar CAD. Dollar CAD's trading at 27.75. I'm still bullish on dollar CAD. Dollar Swiss. Get me to new highs, dollar Swiss. Stop being a turd. Get up here to 93.50 and go higher. CAD Swiss, New Zealand Swiss, Aussie Swiss. Go, go, go. Currency strength chart. Let's go. Aussie still stronger. New Zealand still stronger. Swiss, go flush yourself down the toilet. Let's see here. Dollar yen, 115. Okay, yep. Dollar yen's probably poised to revisit these highs at 116 and change. I'm looking to sell this thing. I'm not buying. Here's what I'm going to do. I talked about this in Flex a couple times at length. We have a yearly pivot down here. We have equal highs or past resistance. If we had a chance for this thing to flush down, I would buy the dip. Okay. But I think what we're doing instead is we're just slowly doing this, and we're just going to continue to grind, continue to grind, continue to grind. I think that's our sell trade. I think we're going to have an amazing sell opportunity between 118 and 120 on the dollar yen, and this thing comes down 1,000 pips. Fingers crossed. That'd be an excellent trade. Plus, I have a right trader reversion setup that gets us into this daily level. Plus, we have our yearly pivot. This could be an excellent trade with a massive rising wedge. The timing will be interesting because we can be super overstretched. We can start, taking some stabs at it. But I do like the setup. I'm going to sell it up here. All right. So what I want to take a look at really quickly, if you've been reading like oil prices, commodity prices, take a look at oil, which we know is, we tapped the $100 level yesterday. S&P rate decision, is that going to stay the same, Denise? Do you see any forecast on that for negative 0.75? I certainly would love them to keep it lower for longer, forever, until, how about this? Until the Euro Swiss is at 1.20, the Swiss National Bank doesn't touch their rates. You have my endorsement, right? Until the Swiss loses, 10% across the ground, across everything in the basket. I hope they keep the rates the same. All right, oil is heading down a little bit, but hasn't broken any of these major lows below $90. So we're watching oil closely. Look at wheat. There's a couple of ETFs I was looking at yesterday. We have cash CFDs. This is a nice way to see it. Big run up on wheat for the last couple of days. This week especially, wheat going crazy high. Soybeans. If you trade CFDs, this stuff is awesome, right? Trade CFDs. Look at soybeans, crazy. Like that's a crazy rally to start off the year. This is a low from late last year into Q4, getting into the start of this year. Soybeans is up 27%. The energy sector, I don't even think has returned that much. So raw materials are doing pretty well. Now, is this a short-term top. I don't know if this is like, oh, well, maybe we hit a top, and maybe the Fed's like, oh, the prices are coming down a little bit. Transitory inflation. I doubt they're bringing that back. But you look at wheat, you look at soybeans, you look at lumber. Okay, lumber. Actually, I'll show you the random length lumber futures market because that has been nuts. It's still pretty elevated. We had this crazy run up, and this is what I think is the potential threat of oil. Oil looks like we have some rising wedge forming and overbought conditions, but this is the scary reality of like this is why I'm not shorting oil because we could have like straight up energy crisis if I mean, and I don't know, I'm sure that there's plenty of escalation that could happen. Um, Again, we don't know that, and I'm not going to speculate on it. But the reason I'm not short on oil is a lot of times you see the crashes, the flash crashes, the squeezes. You see those happening at the top of a rising wedge. It looks like, oh, this is such an easy trade to short. It should drop, it should correct, it should correct. But for the longest time, you don't get confirmation on a break. And so what you do instead is you're like, well, I'm just going to short the top and see if it breaks. And then it goes up first and then breaks second. And we've seen that happen more and more over the last couple of years. I see a lot of rising wedges where they get coiled and coiled and coiled, and then they blow the top off, and then they come all the way back down. And everyone that's stuck here shorting and over leveraged, they get flushed out. They can't afford to stay in the trading longer, and they get crushed, and then the market comes back later. And so the smarter traders, you just trade what you see. If it doesn't break that rising wedge, don't sell it. If it breaks the high, take the chance, put a stop loss in, ride that with a trailing stop loss, wait for an aggressive trend line break, and then short it. So be objective, right? Trade what you see. So that's what I'm saying is like, I just didn't want to see oil do something like this, like we had in some of the futures markets last year or in 2020. I just don't want to see that happen because if that's what happens, I don't want to be short on oil. If that does happen, Aussie's going to get stronger, New Zealand's going to get stronger, CAD's going to get stronger, but then the whole conversation of inflation, we might talk about inflation in the US at literally 10+%. And that's from the fudge numbers that the US is trying to like weight it and say, oh, it's not that bad. It's like, it is bad, right? Gas prices are 50% higher. Used cars and new cars are 20, 25, 30% higher. Rental cars are 30%, whatever. If we have food prices now 10, 15, 20% higher, that's a problem, right? So anyway, don't fight this stuff. In fact, it's like I'd rather find ways to make money on it. So I'd rather be long on commodities and find a way to trade them. There's ETFs to trade them if you trade stocks. If you're a non-US trader, you can trade CFDs. Greatest thing ever, right? Okay, crazy stuff. Okay, any requests? Final thoughts? So here's what I like. If everyone that's watching, if you take a moment, click the thumbs up button for me. I appreciate it. Get that algorithm to recognize that we got live students, people watch the recording. Click the thumbs up button. Have a good saturation of likes to views. That's a good percentage for the algorithm. Thank you so much. Any other requests? I know Equities on Demand will start class in 20 minutes. We have a lot to talk about. We've got some expirations. There's a lot of them. Am I looking at a ton of trades this week? Look, it might be one of those weeks where I did add some more money in. I'm putting some more free capital into my stock account because if I'm going to take assignments, I want to take it in stride. Like I still want to have some free capital, but if I'm willing to take, I want to take like Kraft Heinz, Campbell's. So I want to take some of those defensive plays. Obviously, my portfolio will recover just fine if tech is going to see more love. If the Fangman stocks get some love today, we bought some dips on Google. I bought Tesla yesterday around 750. I also put a stab into GBTC to trade like the grayscale Bitcoin. It's not an ETF officially, but it's at a low enough price point. It's like a 28% discount from the spot of Bitcoin right now. Okay. Gold. Yeah, sure. Gold, silver. Let's take a look. Gold. So XAU USD. Gold had a pretty massive rejection inside of these charts here. I've got XAU USD. This is what I see structure wise, and I'm seeing a lot of correlations now. Like it just kind of as I spent the time with the charts yesterday, I'm seeing the correlations like this. Okay, if gold is this, if gold falls, this is either going to help the dollar rally or this is going to help the stock market correct. Okay, because what we just saw from yesterday's bullish move in the stock market, we saw big bulls on the stock market, big bears and rejection on gold. So if this continues to elevate and keep the recovery a little bit, the relief rally in the stock market, that means that gold comes back down, finds channel support. That is also why if this channel continues to play out, that's why I see the stock market doing something like this. A downward correctional channel on stocks, an upward, bullish channel on gold, but we just have to pick our battles. And we're going to have to trade inside of this. Okay? Or you're just interested like, look, I'm long gold. So every low, every low, every low you just add. Just add your positions. Every counter trend line break, every counter trend line break. If you're long gold, I like to be I'm definitely long gold. I'm long gold, I'm long silver. I'm probably going to do a lot more plays on commodities. There's some diversified ETFs that I'll be entertaining next week. We'll talk about them more in EOD. Okay. But yeah, this is what I see, a little bit of a bullish channel. If this allows gold to drop a little bit lower, watch the dollar, watch the stock market. But I think the stock market is heading towards a channel correction. We came off of a low yesterday. Can we continue that little relief rally? What is going to be interesting to me is where does the money go? And yesterday in that heat map, I showed this in my YouTube video last night. All of the big money was parked right back in the Fangman stocks. So I just thought about this like it's just your 401k money. It's your pension man. It's like all the big money that's like we got to go somewhere. We got to buy something. What are we going to buy? Let's buy the biggest tech stocks that are on sale. Microsoft was down, 17 to 20%. Google's down 20%. Amazon was down 18, 20%. Tesla was down 40%. Okay, take some bites. I did. I bought Tesla, bought more Amazon, bought more Google. I'm in Facebook. I didn't buy more Disney, but Disney's at several levels that I've already purchased. And then I didn't buy Microsoft, but I bought more Apple. Fine. So I'm the same way. I did the same thing. I bought more of those stocks too. So I'm part of the problem, right? But at the same time, it's like, do you think those companies are really going to struggle? I don't think so. I mean, we might have a sideways year in the markets. We might not make new highs, but I still think that if you're willing to hold long term and build something, I think year over year, you're still going to have annualized gains on these stocks that probably outperform or at least keep pace with the overall market returns. Okay. So anyway, this is what I want to watch. Wall Street closes at 4 p.m. Forex closes at 5 p.m. I want to see what the heat map looks like at 4 p.m. Where's the mix coming today? We'll find out. Okay. If we can keep the green today, that would make me pretty happy. I'd obviously like to see the stock market hold and not just be like a one-off trade where it's like what a day yesterday, and it means absolutely nothing where this thing gets faded all the way back down. I'm not sure yet. Okay, but it's just a day. We'll close. We'll figure out where the money's going. We'll do it again next week. I told traders this morning. I do have a modified schedule next week. I'll be live on Monday for YouTube. Monday, Tuesday will be live sessions for my trading room. So equities on demand Monday and Tuesday. Wednesday, Thursday, Friday, I'm going to be traveling. So I will probably end up posting videos for most of my trading rooms and updates in Telegram. And also on Friday, rather than running a live session, I'll probably just have a video that I can post. So I'll probably do the video Thursday night, post it on Friday morning. So I'll post it in the YouTube channel for like a 9 o'clock premiere or something. So it'd be like coming to the live session, but you can just watch the video. All right. So it'll be a little schedule modification next week, but that doesn't happen till Wednesday, Thursday, Friday. Okay. Heat map. Yeah, just go to finviz.com. Here it is right here. So this is the live running heat map. It's finviz.com. You can go to the map section. So just click on the home page, go to maps, and it brings up the active heat map. So here's the link to it right there. There it is in the chat for you. Cool beans. All right. And there's actually some really cool stuff you can do with FinViz and the screeners. I've been saving a lot more like custom portfolios and custom screeners. So yeah, it's good. I mean, you're searching for stocks, you're searching for sectors and what's performing well. What's been crazy, I'll do one thing before we go. Take a look at this. I go to the screener, I go to all. I'm just going to keep this. Let's check this out. This is what's nuts. Performance. Let's go to performance. Where are you at? Right here. Performance. Right here. So what I want to look at is what is down year to date. Okay. Now, you want to see something crazy? Year to date. Year to date, stocks that are down over 50%. That's from January 1 to now. We have over 200 stocks that are down over 50% year to date. That's insane. Okay. How about 75% year to date? We have 23 stocks down 75% year to date. That's a lot of stocks, right? Now, I want to see over the last, and again, now these aren't going to be like some of these, if you, what I would filter is if I did, let's go 50+%, just a little scan here, 50+% to the downside. So obviously we're looking at like, well, are these stocks that can recover? Well, the first thing I'm going to do is get rid of all my crappy volume. If this isn't trading over a million volume, I'm not even interested. So I'm going to go average trading volume is at least $1 million or a million shares. So I want to go over a million, okay, for average volume. And I just went from 202 to 77. So now we're talking about legitimate stocks with liquidity, and we have 77. Now, what I'd like to see is with my year to date performance and my average volume, do I have anything that has limited debt? Okay, so do I have a debt to equity that is low? Now I have 47 stocks. So do we have strong fundamental stocks that have just been getting their butt kicked? And then I want to see what sectors they're in. Would I trade technology right now? Maybe. Now, one more thing I'm going to add for a filter is price. I'm not that interested in trading dirt cheap, dollar pairs or, dollar, $2, $3 stocks. I want to see what stocks do we have that are over $10. Okay. Over $10. Because look, let's be honest. I don't feel that great about buying stocks that are under $10 because they're probably going to be either bought out or they're going to be bankrupt. So, I mean, if I'm going to put my money somewhere, let's at least look at some stocks. So, 202 stocks now drilled down to 5. Amplitude, Fluence Energy, Roblox, Shopify, too simple. We have good trading volume. Okay. They're down like crazy. We have a low debt to equity, which means that they have cash, right? They have cash. They have positive cash flow. So I would, again, just a quick filter, drill this down. I would look at these stocks. Now, Shopify I know is, $650. There's an article I read yesterday. Is Shopify a better buy than Amazon? You be the judge. I like Amazon because I use Amazon. I never shop on Shopify, so that's more of like a consumer preference for me. Roblox is down below the pre-IPO levels. I mean, it's interesting, but Roblox is also, it's a game, right? Maybe it's a metaverse play. There's a huge user base. Kids are playing Roblox, and it's just like Fortnite. There's Robux, and it's in-game currency. There's Fortnite. There's V-Bucks. It's like all that stuff's great, but does it mean that it should be a multi-$100 stock? I don't know. Probably not until they put ad revenue in the game and make it not even a game anymore. So, is there any of these that I'd trade? I don't know. I'd have to do some more digging. But the scanner is really helpful. You can put in some interesting metrics. You can get a quick glance. You can also go sector by sector. So anyway, whatever. Have fun with it, and we can talk about it more next week. Okay. But it's a crazy market. We got some beat up stocks that shouldn't be that bad. I mean, and I say should, like the low tide sinks all ships. So when the market's generally down and it's dragging everything with it, what's been crazy is just to see like some of the tech stocks have been hit so hard. It's almost like 2000 all over again. It is like the valuations are so high they just get absolutely crippled. Um, and I think that what you're going to see is I'm starting to read more about buybacks. I saw that Under Armour did like 200 million of buybacks, or maybe it was 500 million. I saw one other one was what the heck was it this morning? There's another one for some buybacks this morning. What is it? What is it? Under Armour launches 300 million accelerated share repurchase program. I also saw that FHN First Horizon National was offering like some weird like corporate action to buy their stock at $10 a share. It's like it's trading at 16 a share. What the hell am I selling it for? What was the other one? Anyway, there's just buybacks going on with healthy companies. They're trying to get their stock price to lift a little bit. Fundamentally, some companies are actually strong and they have cash, they have limited debt, but yet their stock price is just terrible. So it's kind of those that are like, yeah, I don't mind having those stocks, but I certainly don't want to hang on to stuff forever and just watch it all go red. I'm trying to avoid the Red Sea, right? I'm trying to at least, again, dead capital, free capital, working capital. I talk about that in that YouTube video from last night. So check it out. Have fun with it. That's going to do it for me, everybody. I'm going to go. I need some coffee, even though you think like this guy's jacked up. I actually don't drink any caffeine at all. Tea is decaffeinated. Coffee is decaffeinated. This is the market for me. It just keeps me energetic, I guess. Keeps me young. I don't have much gray hair either. Somehow, I guess I like this stuff. All right, I'll let you go. Again, let's have a good trading day. Let's finish up the week strong. Have a great weekend. We're back on Monday, same time, same place. Take care, everybody. Bye bye.